2008 was a bad dream.
We're red everywhere, essentially, down by 4-5%.
It was a bloody year on Wall Street.
We're down over 16%.
It was the worst day on Wall Street.
The stock market is now down 21%.
Apple shares are just getting hammered this morning.
Traders here working the phone say a lot of their customers are freaked out.
Because we're now down 43%.
Traders say this is the craziest day they have ever seen.
This is the most significant financial crisis in the post-war period.
What in the world is happening on Wall Street?
So horrible.
But veteran traders say they've never seen anything like it.
This could be the most serious recession in decades.
Bitcoin is a new virtual currency.
$1. Buy some Bitcoins, put it in a goddamn wallet.
Bitcoin now a legal currency in El Salvador.
Investors can get exposure to the world's largest cryptocurrency.
The United States will be the crypto capital of the planet and the Bitcoin superpower of the world, and we'll get it done.
Past performance is not a guarantee of future results, and this mantra is embolized in a disclaimer of any financial product. But although it's true, understanding history and cause and effect relationships, it's essentially the only tool that really allows you to understand the present and predict the future. In this video, I will not color Bitcoin positively or negatively. I will tell a story as it is from the day it was created to the present day, and you will draw conclusions on your own. The official history of Bitcoin begins on August 18, 2008. On this day, the domain was registered, bitcoin.org, and who registered it is still unknown for certain. We only know that this person or organization signed the name Satoshi Nakamoto. As you will soon understand, Satoshi was and is a really paranoid person. Even at the registration stage, he already maintained the maximum level of anonymity and hid all the traces. But if it's relatively easy to hide a hardware footprint, then it's something more interesting with the money footprint. Today, to avoid revealing your identity when buying a domain or something else, we could simply pay in crypto. But what about the time when Satoshi hasn't created it yet? To bypass this de-anonymization, he used the service called anonymousspeech.com, which allowed you to buy gift cards, for example, for cash, and he paid for the domain with them. But there is an even more interesting fact of this moment. Less than a day before of registration, bitcoin.org, domain has been registered called netcoin.org. And considering that it was also registered on anonymousspeech.com, most likely Satoshi really considered such a name as an abbreviation for network coin. And that is, there were really good chances that the main cryptocurrency in the world would be called differently. Approximately 100 to 150 people received an email from Satoshi with the title Bitcoin, a peer-to-peer electronic cash system. And the recipients are people from the mailing list on the website metsdao.com who are interested in cryptography and encryption. And you can pause the video and read the email yourself. So he was not talking about the revolution there. He simply presented his work to a narrow circle of specialists who could understand it. He gives a brief description of the essence and encourages them to read the full version on the website bitcoin.org. The website contained the Bitcoin white paper. It's a document that essentially triggered the entire chain of events, and it described the principle of operation of Bitcoin and the blockchain on which it was based on. And by the way, the term blockchain was not included in this document at the time because at this stage it was described chain of blocks. Although this video is about the history of Bitcoin and not about the technology behind it, I believe that understanding the system is extremely important since it was this system that started it all. And if you know how Bitcoin and blockchain work, you can skip to this point of the video and move on to the next chapter of the story. And for the rest, I will try to explain it in super simple words and the content of the white paper and the principle of Bitcoin operation. The first thing to understand is the difference between centralized and decentralized system. So Satoshi starts with a simple thought. When we pay online, we always have to trust a third third party or a bank, and this is an example of a centralized system. If you want to buy an item online for like $10, you give the bank a command. It checks if you have the money, and if you do, it makes a corresponding note in its notebook. So for example, the seller now has plus $10 and you have minus 10. And then it tells everyone everything is okay and the deal is done. On the downside, the bank can block the payment if it doesn't like something. Or, for example, any authority it reports to can get access to the bank's logs, or another one, the bank can get hacked, and the last one, the bank charges a commission. The simplest version of this centralized system is an offline meeting with the seller where you give him $10 in cash physically without a check, without registering the transaction anywhere. And this solves all the disadvantages of centralized system, but there is a problem of trust. In the case of any proceedings, it is your word against the word of the seller. The task that Satoshi set himself to is to take the best of two worlds to create a decentralized system where the problem of trust will be solved without a third party. And so we move on to the principle of operating of the blockchain in Bitcoin, which I will try to explain as simply as possible. Just as in the case of a bank, to store information about transfers, you need a specific record log, which will receive information about all transactions. But if in centralized system the log is kept by the regulator or the same bank, then in the blockchain this log is stored by all network participants at the same time, and it is important to understand that they not only have access to a file that can be changed, but they have their own personal copy, and that is, they own it. When you send bitcoins to the seller, the transaction information goes online and waits for a confirmation, or in other words, until it's recorded in a block. The block is essentially one of the pages of a notebook. Just like, on a regular page, the space in the block is limited. As soon as there are enough transactions and no more space, and this block needs to be sealed and filed in the main log. And how does this happen? All unconfirmed transactions are hanging out somewhere on the network, and every network employee, so-called miner, sees them and tries to write them to the page, but for this you need to do a really difficult job. Miners started the competition. They collect all these transactions into one block, and using brute force method, they begin to select a specific number, which basically added to the block data will give a unique digital fingerprint corresponding to the criteria, and it is called a hash. Whoever selects this number first, they get the right to close the block. Then, having done this, he sends the finished block to all network participants, and they check it, and if the hash really fits the conditions and all transactions in the block are correct, they say, okay, the block is honest, and coming to so-called consensus. Then there are two important processes. First, this block is attached to the chain of previous ones. The mechanism is simple and ingenious. Each block stores information not only about the transaction of this block itself, but also hash of the previous block. And this results in a chain of blocks in which all the links are sequentially connected. If someone tries to change the entry in the old block, for example, to assign extra coins to themselves, the hash of this block will instantly change, which means that basically it will not match the hash that it's recorded in the block even behind it and behind it and behind it, and the connection will break. All other participants will see the discrepancy and obviously reject the fake. To make changes, you need to shovel all the subsequented blocks to 51% in the past of all devices on the network at once, and this is almost impossible, and therefore the data in the blockchain is called immutable. Secondly, the miner who found the correct hash first receives a reward for the work done in the form of new coins. At the time, it was 50 bitcoins and small fees that basically the sender attached to the transaction so that they could be proceeded faster. And this is his motivation to keep the network running. And this is exactly how new coins are issued. Also in the white paper, Satoshi pointed out two important points. The network users remain anonymous anonymous and there is no link to real passport data, only wallet numbers and keys to them. And the emission should be limited. The price coins for solving the cases will be halved every 4 years, and this is called halving, which is why the miner's reward is now 3.125 bitcoins instead of 50. And so it will be until the total number of coins reaches 21 million. After that, the new coins will no longer be created and issued, and this is the exact opposite of the dollar, which is printed as much as they want. And this limited resource raises the price according to the principle of gold and silver. To summarize, the Bitcoin white paper describes a payment system in which the problem of trust between the sender and the recipient of money is solved without the participation of a third party. All transfers within the network are visible to each participant, but there are only wallet addresses and transfer amount. The people behind the wallets remain anonymous. New coins appear only as a reward for work, or in other words, network protection. And there will be 21 million bitcoins in total, no more, no less. It's important to understand that on October 31st, 2008, Bitcoin was not created. The white paper is purely theoretical work without a single line of code, which Satoshi shared with hundreds of basically cryptographers to discuss the concept. Interestingly, Satoshi's work did not receive any reaction at all in the first early days. It was only a few days later, on November 3rd and 4th, that the first criticism appeared, and only on November 7th, the first compliment from the person who understood the system. It was Halving, and he was a renowned cryptographer and cyberpunk. He wrote, "Bitcoin seems to be a very promising idea." A little later, he will become the first Bitcoin holder besides Satoshi. 3 months later, the code was ready and Satoshi Nakamoto performed the most important action in the history of the network. He launched the first version of the program and generated block number 0, which is called the Genesis block. For this, he received a reward of 50 bitcoins, and these 50 bitcoins are the first and most ancient coins. They are still in his wallet. Interestingly, in the first block, Satoshi encoded the message. In the Coinbase field, he left a newspaper headline. The Times, 3rd of January 2009, Chancellor on brink of second bailout of banks. And it wasn't just a phrase, it was a timestamp, proof that the block was not created earlier than this date, and the political manifesto as well. Bitcoin is an alternative to unstable banks that need to be saved at the expense of taxpayers. 5 days after the creation of the first block, Satoshi took the next step. He released the software to the people, and he sent it to the same mailing list at madsdao.com, and SourceForge was the main hosting for open source project in those years. The subject of the message was Bitcoin version 0.1 released, and the version already allowed users to create new wallets, receive and send bitcoins, and most importantly, mine. After the publication, the first enthusiasts started testing Bitcoin. Halving was the second person after Satoshi to launch the client, and the day after the code was published, he wrote the legendary tweet. Look at the date. Satoshi sends 10 bitcoins to Fini, and it's important to understand the context. It wasn't a purchase or a service, it was a test and the work of two enthusiasts. But yes, this is actually the first transaction on the network, and Fini became the world's second Bitcoin holder. More than 6 months have passed since the release of the first client, and so far only enthusiasts interested in cryptography have used it, testing and identifying bugs. There has been no talk of any Bitcoin trading yet. In fact, you could already mine, own and transfer Bitcoin, but the answer to the question of how much it costs was 0. It was on October 5th, 2009 that Bitcoin received its first valuation, and the exchange rate was published on the New Liberty Standard Forum, and they calculated it simply. They took the cost of electricity spent on mining 1 Bitcoin and divided it by the dollar exchange rate. The result, 1 USD, was equal to 1,309.03 Bitcoins, and that is 1 Bitcoin was worth 0.00076 cents. And although the event seems insignificant, up to this point Bitcoin was just a number in the code. Since that publication, it has been linked to a fiat currency, and the price may have been ridiculous, but now people can say, I'm mining X cents a day, and from that moment on, they began to look at it in a new way. Now Satoshi creates Bitcoin Talk, and this forum has become the home for the first miners, programmers, and enthusiasts. In fact, the whole formation of the community began right there, and before it was scattered communication on third-party forums. A user with the nickname DW$ on the Bitcoin Talk forum announced the creation of BitcoinMarket.com, and it was the first crypto exchange in the world. And before it, people agreed to exchange in private messages and on forums, which, as you know, was risky. And the launch was held on March 16th, and generally it was already an exchange with a glass of sellers and buyers, but in fact, it was more like a bullet board. Buyers submitted orders for the purchase and sale of Bitcoin, and DW$ was kind of like a guarantor that held the funds of both parties. At the time of launch, DW$ placed the first bid for 500 Bitcoins, and the price was 0.0067 cents per Bitcoin, and that is for $1, you could buy 149 Bitcoins. Later, the users themselves started trading on the platform and formed like a market prices. Unfortunately, there were no screenshots left, but judging by the forums, the price was about 0.0035 cents. And with the help of the web archive, I managed to look at the first design of the site, and let me tell you, it looked austere, to say the least. Laszlo Hajnowicz offers a deal. I'll pay 10,000 Bitcoins for a couple of pizzas, like maybe 2 large ones so I can have some leftovers for the next day, you know. Later he explained, I just think it would be interesting if I could say that I paid for the pizzas in Bitcoins. On May 22nd, the Ugur Cherkos, who was 19 years old at the time, he agrees, and he orders 2 Papa John's pizzas for about $35, delivers them to Laszlo, and receives 10,000 Bitcoins. So the community obviously having fun. No one knows then that an event has just happened that will be remembered as the most expensive dinner in human history.
You paid 10,000 Bitcoins for 1 pizza?
It was 2 pizzas, actually.
Oh, you got 2 pizzas out.
Today, 10,000 Bitcoins would be worth $700 million. And then it was just a joke for the sake of the joke, and the first real proof of concept as well. If Bitcoin can be exchanged for pizza, it can be exchanged for anything.
Yeah, May 22nd, Bitcoin Pizza Day, so
It's called Bitcoin Pizza Day?
It is.
Bitcoin is still a toy for geeks. The price is around 5 to 8 cents, and exchangers work on their word of honor. But the situation is starting to change, and it's changing really fast. In Japan, a guy named Jed McCullough runs a small business, a website for gamers who sell cards for the game Magic the Gathering. The website is called MTGOX, which is short for Magic the Gathering Online Exchange. This trading platform worked on the principle of a full-fledged exchange with a class of charts and etc. Jed is a programmer. He is smart, technically savvy. When he finds out about Bitcoin and sees how the simple Bitcoin market works, it dawns on him. Damn, I already have a ready-made exchange with a glass, with orders, charts, and etc. We just need to change cards for coins. This is how a new version of Mt. Gox appears, now a Bitcoin exchange. And by the way, this is Jet's first post on Bitcoin Talk, and pretty quickly, Mt. Gox will become the main trading place in the world, and displacing BitcoinMarket.com simply due to a better exchange engine and a more modern design. A year later, Mark Karpeles, already known to most, will buy it. If you imagine Binance in terms of modern design, then everything was a little simpler. The site looked really cool at the time, even with a chart with prices on the main page. Interestingly, the CoinMarketCap website seems to have started collecting data on the price of Bitcoin precisely since the appearance of Mt. Gox. Further along the video, we will be able to see exactly how the price has changed. As you can see, the first months after the creation, the price was hanging at the level of 0.06. One of the developers of Bitcoin, Jeff Garzik, creates a thread on Bitcoin with the title Strange Block 74638 and writes the message, "The value out in this block number 74638 is quite strange." Quite strange in this case is a polite form of the phrase, "Oh, what the fuck is going on here?" A critical vulnerability has been discovered in the Bitcoin code. It allowed you to create an infinite number of coins out of thin air. And a hacker or just a curious user, we don't know, took advantage of this and generated 184 billion bitcoins in a single transaction. And let me remind you, the maximum number of bitcoins that can exist at all is 21 million. And here basically they created 9,000 times more at a time. And if this transaction had been recognized as valid, Bitcoin would have died on the same day. Because what's the point of money that can be printed endlessly? The community is in a panic. Satoshi, who by the time had already handed over a part of code to the developers, but still he's active, he reacts with lightning speed. And within a few hours, they find vulnerability, release a patch, and convince the miners to switch to the new version. And here's his first message, by the way. The chain of fake bitcoins is rejected and everything is going back to normal, and this moment is the first and hopefully the last time Bitcoin was on the verge of death due to a bug in the code. But the lesson has been learned. A decentralized system can fix itself if the community reacts quickly enough. And funnily enough, after the incident, the price of Bitcoin briefly jumped, but later returned to standard values. In fact, the first mini bull run in history began in October of 2010. The funny thing is that it happened completely organically. I searched all the archives, but I did not find a clear reason for this bull run. The trading volumes were so small that buying bitcoins for even a couple of $1,000s could raise the price, and with the appearance of convenient Mt. Gox, the audience began to grow. Against the background of rising prices, all the same members of the Bitcoin wallet community began to buy more actively than before. And on November 9th, they pushed the price to 43 cents. But more importantly, the market capitalization is reaching $1 million for the first time. It seems like it's pennies, but psychological milestone has been passed, and Bitcoin is now a $1 million industry. The Bitcoin community understands that further growth is possible only with the expansion of the audience and the use of technology for utilitarian purposes. And in separate chat branches, users throw options for who can be offered to use the Bitcoin to solve real problems and popularize the technology. And then an event takes place in the world that will soon become a turning point for Bitcoin. WikiLeaks, Julian Assange's organization that publishes classified US government documents, is facing a total financial blockage. Visa, MasterCard, PayPal, Bank of America have come under pressure from the US State Department. And basically, they are disabling the ability to donate to WikiLeaks, and the organization's money is frozen. It's on the verge of survival. A user with the name Genjix creates a topic, takes the initiative initiative to contact Assange and help with accepting donations via Bitcoin. And by the way, Satoshi was completely against it, fearing for early fame in the wrong circles. And WikiLeaks did not respond at the time, as Julian Assange would later say in an interview they listened to Satoshi. But it seems to me that they simply had no time to understand the geek experiment. By the end of the year, the price adjusted and it was around 30 cents. But now I want to focus on another event. Michael Hendricks launched CoinPal service. It was something like a Bitcoin store. Unlike Mt. Gox, the interface was as simple as possible and allowed you to buy Bitcoin through PayPal in essentially one click. Not one click, there were a lot of clicks, but still much easier than Mt. Gox. After 4 months, the service will be closed already due to disagreements with PayPal, but during this time, it has made a huge contribution in an unexpected way. On December 31st, Michael Hendricks brought Bitcoin into the mainstream for the first time, and he's releasing a YouTube video called "Buy Bitcoins with PayPal." I don't even know how it makes me feel, just take a look yourself.
I want to buy 10 Bitcoin, and I'll enter my Bitcoin receiving address there. I click continue. It presents me with the details of my order. So the exchange rate right now is 30 cents, 10 Bitcoins, that's the purchase price. PayPal is going to charge 39 cents in fees, so those are passed through to you. Then a convenience fee for using the service, grand total, and the effective exchange rate for this purchase. That all looks good to me. I'll click continue.
Yeah, in this video he bought 10 Bitcoins for $3.48, and they are currently worth $733,000. And the comments under this video are a separate kind of art, and the link to the video is in the description along with all the other sources, and you can watch it for yourself. Despite PayPal's quick blocking, Hendricks managed to make a huge contribution. He introduced about 1,500 people to Bitcoin and sold them a total of 60,858 Bitcoins. Let's stop here for a second. In order for us to understand the scale of what's happening, we will add a little late game to our video. Every single time Bitcoin reaches a local peak of popularity, like it is right now, we will buy it for $100. And statistically, popularity peaks are the worst moments to buy, but also they are the most likely. Also, every time we buy Bitcoin, we will invest $100 in S&P 500 for comparison. So today you heard about Bitcoin for the first time and invested for the first time as well. Taking into account the price for $100, you bought 333 Bitcoins and 0.08 S&P. Profit and loss of $0. Now, do you remember that Bitcoin Talk community was actively looking for use cases for Bitcoin? So, while Ginjax was looking at Bitcoin as a way to circumvent sanctions for WikiLeaks, Ross William Albridge, known as Dread Pirate Roberts, focused on another opportunity that Bitcoin offered: an anonymous payment method. He runs a website called Silk Road. The site operates on Tor network, and this means that you can only get there through a special browser that hides all the hardware traces. No regular domains as well. Only .onion is an address known only to the initiated. And payment, again, only Bitcoin. Initially, Ross wanted to create a platform for free trade in anything. Books, art, rare seeds, you name it. But the market is a cruel thing. Where there's demand, there's always a supply, and very quickly Silk Road is becoming the main online marketplace for selling things that cannot be bought legally. Drugs, fake documents, and hacking services, and all the other stuff. And that's where what we now call the first real bull run begins. Before Silk Road, Bitcoin had two functions. The first one was to store value for geeks who believe in technology, and the second is the cheap way to transfer money. Silk Road has added a third critical feature, a means of exchanging for real goods that cannot be bought anywhere else. The economy works simply. basically. The buyer needs bitcoins to buy goods on Silk Road. He goes to MTGOX exchange, buys bitcoins for dollars, and then the seller, having received the bitcoins, wants to cash them out. He goes to the same exchange and sells them back for dollars. And every transaction on Silk Road creates a demand for bitcoin trading in both directions. Trading volumes on exchanges are starting to grow rapidly now. The more Silk Road grows, the more Bitcoin volumes and prices growing. And this was the first piece of domino to launch a bull run in 2011. Something that seemed impossible is happening on MTGOX exchange, and the price reaches 1 Bitcoin equals 1 USD. And this is the most important and psychological milestone. Bitcoin is starting to be discussed outside of geek communities. Time magazine, America's main news weekly, publishes an article about Bitcoin. Getting on pages of Time in those years was like winning an Oscar for the technology itself. Any sane person at this stage of the video will say that the article is most likely about the Silk Road and the Bitcoin is a very bad phenomenon that promotes crime. But for some unknown reason, this is not the case here. The article tells about the secret of the creator and gives the explanation of the technology in simple words. Despite the fact that author suspects that Bitcoin is a bubble, he lists all the advantages such as anonymity and decentralization. And this is enough for the masses to start talking about Bitcoin. So Bitcoin is stable, there are almost no bugs, the community is growing and the media interest is growing, and at this point something happens that divides the history of Bitcoin into before and after. Satoshi Nakamoto writes a last letter to one of the developers: "I have switched to other things and will probably be unavailable." And after that, he disappears completely from the public field. His account on the forum stopped responding. The email is silent, and during his public career, he created more than 22,000 wallets for mining and testing, and about 1 million coins were found at the address that could be traced. At today's price, Satoshi's fortune can be estimated at $70 billion, which makes him one of the richest people in the world. But since that day, none of the wallets have moved, and no one knows why Satoshi left, but there are 3 main theories. Let's talk about them. The first is the theory of security. Bitcoin began to attract attention from the media and, as a result, the special services. Satoshi realized that his identity will soon be discovered and decided to just disappear in order to protect both himself and the project. The second is mission accomplished theory. He did what he wanted to do and the code is working, the community has formed, his continued involvement would only hinder the centralization. The third is the theory of disease. Back in December, he wrote that he would appear rarely and perhaps he knew that soon he will not be able to continue. So we will never know the truth, but the fact remains that the creator of the most revolutionary financial system in the history has disappeared, leaving behind a code, a riddle, and 1 million coins in his wallet. Against the background of Silk Road and media attention, Bitcoin is growing at unrealistic pace. At the beginning of June, the price had already reached $8.50, and even though now it seems like it's pennies, let me remind you that at the beginning of the same year, the price was 3 cents, which is 30 times more for a second, And this is already a legendary bull run, but then the last piece of domino falls, turning an already huge growth into absurd one. After the departure of Satoshi, who asked not to use bitcoins, Julian Assange, the leader of WikiLeaks, remembers about Bitcoin again. And being in a desperate situation, they announce, "We are starting to accept donations in bitcoins." And this is the first time in history when a large organization with a worldwide reputation, although not, ambiguous one, begins to use Bitcoin for the real purpose of bypassing financial blockage.
WikiLeaks posted.
Website WikiLeaks, and namely it's found.
This is starting to be discussed in the media, not only in magazines, but also on television. It doesn't even matter if Bitcoin is praised or blamed. It's the first time anyone has talked about it. The price is now skyrocketing. Bitcoin reaches $30.05, and everyone is in complete shock and delight. And by the way, at that moment, you heard about it again and decided to check your portfolio. Your $100 invested in Bitcoin has turned into $10,016. But it's not so rosy with S&P. You have $102.64 here. At this point, you buy another $100 of each of Bitcoin and S&P. Unfortunately, the first miners who have been hoarding coins for years are not as restrained as you. Many of them have never seen such money and they start selling. Of course, speculators have joined them already, and the price starts to fall for a week. It fell from $30 to $20. Your newly invested $100 turned into $66. Ouch.
We're down to 10 cents, we're down to 9 cents, 6 cents, we are going 5 cents, we are down to, wow, I don't know what this means, people. We are down to 1 cent.
Now you have seen the real-time reaction to the result of work of the hacker who gained access to the account of the former owner of the exchange with administrative rights. The hacker credited a huge amount of non-existent bitcoins, or in other words, unsecured bitcoins, to the account and put them up for sale at the lowest price, bringing down the exchange rate to 1 cent per bitcoin in one moment. Taking advantage of the super low price, he managed to buy and withdraw 2,000 real bitcoins. But you know, for an operation of this scale, $40,000 of profit is nothing. Most likely the hacker did it to just annoy Mt. Gox or just to show what he's capable of. As a result, Mt. Gox cancelled all the transactions and the exchange rate recovered. The financial losses weren't big, but that's not even the point. The exchange was unavailable for 7 days, meaning customers lost access to assets, and although it was temporary, the bitter taste remained. And since the newcomers didn't really share the concept of Bitcoin in Mt. Gox, the general trust was undermined. The price after the incident, about $15, and that is relative to the peak. The price fell by 2 times, and looking at such losses, everyone started selling off the leftovers. The market believes that the Bitcoin bubble has burst and it's starting to sell off. The price has been steadily falling for the rest of 2011, and in November it reaches $2. So your $100 investment at the peak turned into $6.50. Bitcoin was buried, and it's very painful to look at the portfolio, but considering the previous investment, it's still not too bad. At the bottom, when it seems like it won't get any worse, the smartest and most patient started quietly shopping. The price will increase slightly and the year will close at $4. The whole year of 2012 is marketed by recovery. No big events, no skyrocketing, just quiet hard work. One of the funny things is that on 15th of January, an episode of the TV series The Good Wife was released with the name Bitcoin for Dummies. The entire episode was dedicated to the mystery of the creator, and given $2 price tag at the time, the episode would prove pathetic in many ways.
I went online and I bought 1 Bitcoin last night.
Really? It's the future.
I don't know. It didn't feel real.
Oh, real's gonna change. Just watch.
BitPay is being created, a service that allows legal businesses to accept bitcoins. The first stores are starting to experiment with payments, and no boom, but progress is happening here. One more interesting thing, around the same time, one of the smartest investments of the decade is taking place. The Winklevoss brothers, Harvard rowers who hired Mark Zuckerberg at the time.
You Mark Zuckerberg? Yeah. Cameron Winklevoss. Hi. Tyler Winklevoss.
You guys related?
Received $65 million in compensation from Facebook, of which they invested $11 million in Bitcoin. It seemed crazy at the time, and they bought about 1% of all existing coins. The brothers said Bitcoin can become more influential than Facebook, and in 2012 they were laughed at, and in 2026 their fortune is estimated at $3.7 billion each. By September, the price rises to $11. The reasons for the growth are purely organic. The market has moved away from the collapse, and there is slight positive energy in the media. Silk Silk Road continues to work and attract new users, and now the Bitcoin Foundation is also founded. The mission, standardization and protection of Bitcoin. This event showed that Bitcoin has responsible leaders who are ready to communicate with regulators and businesses. There is an event embedded in Satoshi's code from the very beginning. The first halving. The reward for miners per block is reduced from 50 bitcoins to 25. With halving, the supply drops, and if demand remains at least at the same level, the price should rise. But as expected, the price doesn't skyrocket instantly. It just starts to creep up very slowly, almost imperceptibly. By the end of the year, the price reached $13.50. The year started relatively calmly. The price continued to rise gradually due to halving, and the crash of 2011 gradually began to be forgotten. On February 26, the price reached its former peak of $30 again. By the way, around this moment, James Howells accidentally threw out the hard drive from his old computer, forgetting how he mined about 8,000 bitcoins on it a couple of years ago. And the disk was taken to the landfill, and James is still suing the dump and trying to buy it. So getting back to Bitcoin, since this time the growth was purely organic without a sharp hype, there were no sales. And most importantly, against the background of general positive energy, all the conditions for a bull run appeared. Bitcoin was like a power keg, only sparks were missing.
Making a run for the ATM. People in Cyprus try to withdraw as much cash as they can. On news, up to a tenth of their savings could disappear.
You can have the money, but you've got to pay for it. That's German Chancellor Angela Merkel's message to Cyprus.
Thousands of young people in Cyprus are protesting against the bailout accepted by the government.
The world is in a crisis again. The government of Cyprus announces, in order to save banking system, we are introducing a compulsory cut of deposits. If you have more than 100,000 euros in your account, we will simply take a part of it, forced, without asking.
Everything's zero now. It's like a tsunami. Nothing's going to be left.
I think the general feeling was absolute shock and disbelief.
And people are shocked. Everyone remembers that money in the bank is not an absolute guarantee. They can be just taken away easily. And here it is important to understand the coincidence of timing. For the first time in history, a major financial crisis coincides with the existence of decentralized currency that cannot be confiscated by government decision. And at the same time, Bitcoin is already at its all-time high, and the mood inside the community is super positive.
Bitcoin is a good alternative.
Bitcoin could be the next revolutionary thing that...
The Cypriots, of course, are starting to buy Bitcoin and pushing the price up. But that's not even the point. The bottom line is that the whole world is talking about it. And the thought money in banks is unreliable sweeps through all countries. And the only real alternative to banking system is becoming more popular than ever. Bitcoin is starting to be talked about in the news again, and in a very flattering way. So the price is flying into space. Price reaches $227 and the capitalization has broken through $1 billion, an increase of 7.5 times in a month and a half, a new record, a huge hype, and everyone believes in Bitcoin again. And you, of course, decide to check your investments. So your first purchase is now valued at $75,666.67, and the second one, which you really regretted a year ago, is now worth $755.41. And everything is fine with S&P too. The first purchase cost $124.18 and the second $120.98. Not bad, of course, but as if Bitcoin showed itself a little more interesting. Anyways, you are investing $100 again. And of course, at this moment, what was supposed to happen is happening. MTGOX servers cannot withstand the load. The exchange goes offline for 2 days. To understand what happened next, you need to understand the context. MTGOX is not only the exchange, but it's the main one. Almost everyone who wanted to buy Bitcoin went there, and many, especially beginners, did not withdraw coins to their wallets. They just basically let them on the exchange thinking it was safe. And now tens of thousands of people have all their savings blocked for 2 days without any explanation, without the ability to withdraw. And when the exchange started working again, trust just disappeared. People started taking out everything they could and sell. In 5 days, the price dropped from $227 to $68. A 70% drop. Bitcoin is being buried again, and they say again that this is the end, and they predict a drop to zero again. And you look at your $100 investment a couple of days ago, and you just feel bad. It turned into 30. But taking into account past investments, everything is fine. To be fair, the situation with the exchange scared mostly newbies because people with at least some experience understood that the problem was not with Bitcoin, the problem is the stock exchange with the outdated engine. They looked at the price and decided that this was the best opportunity to buy Bitcoins on the cheap. From April to October, the price is slowly but surely rising from $68 to $135. The market is preparing for something more, and this more will not keep you waiting. San Francisco library. Ross Altbridge, the creator of Silk Road, is quietly working on a laptop. 2 men approach him and ask him to step back. While he's distracted, the third one grabs the laptop. Dread Pirate Roberts is being arrested. Silk Road closure. It would seem that the closure of the main demand driver should bring the price down to zero. Without Silk Road, the Bitcoin is not needed. The price should drop, but it's not happening. By this point, Bitcoin already had other legal drivers, and now there is even added interest from large investors who were previously afraid to enter because of the drug connection and fears that Bitcoin would collapse when Silk Road was closed. The price freezes in anticipation.
So I'm here to talk about Bitcoin and China and my startup in China called BTCChina. How many of you have heard of Bitcoin? I assume almost all. And how many of you have Bitcoins? Wow, that's awesome. This is why this is called Silicon Valley. You guys are all into it.
The first Bitcoin exchange operating with yuan, BitcoinChina, is being launched. For understanding, previously the Chinese could buy Bitcoin on MTGOX, but for this they had to first convert yuan into dollars. And there have always been huge problems with this in China due to strict restrictions on capital withdrawal. As a result, it was hardly used, of course. And now there are no difficulties, but most importantly, the Chinese got the opportunity to export capital from the country without violating the law. You just simply buy Bitcoin for yuan, transfer it to a Western exchange, and sell it for dollars. As it turned out, the Chinese had a lot of money they wanted to withdraw, like a lot. When the big players in China understood this mechanism, it got heated quickly. November 1st, the price is $200. November 10th, the price is $348. November 15th, $419. November 18th, $496. And on the same day, the US Security Commission and FBI declared that Bitcoin is a legitimate financial instrument and not just a platform for criminals.
Today and tomorrow is the legitimacy, the rising legitimacy of Bitcoin. These hearings are not necessarily about Bitcoin as a threat, although that'll be discussed. This is also about Bitcoin arriving in Washington on the national stage and having policymakers take a look at it seriously. It's not just a hobby anymore. This is for folks who support Bitcoin. They see this as a real opportunity.
The market, expecting a ban, exhales and files on. On November 1st, the price updates the historical maximum of $1,128. The annual growth rate is 8,250%. And you are shocked when you open your portfolio to check the investments. The first Bitcoins you bought are now worth $376,000. And then the second, $3,753. And the $100 you recently regretted buying are worth $496. Meanwhile, everything you've invested in the S&P is now valued at $399.99. Basically, after that, you just buy another 100. The People's Bank of China looks at the outflow of capital and is horrified. Prohibition. The financial institutions are prohibited from conducting transactions with bitcoins. And panic comes. In 13 days, the price drops from $1,150 to $519. As usual, you feel bad when you look at how $100 turned into 46. But against the background of other investments, everything is not that bad.
In the space of 2 hours, it dropped from a high of just under $1,300 at the start of Thursday to just under $1,000. Now, the reason for that, we touched on briefly there, events in China.
By the end of December, when the passion subsides, the price is fixed at $800. The year is closed and everyone is waiting for 2014. And nobody knows that this year will be the scariest in the history of Bitcoin. The price is in the range of $800 to $900, but strange messages are starting to appear on the web, and some users complain about delayed withdrawals from Mt. Gox, and someone has not been able to withdraw money for several days. Official version: technical problems. We will fix everything soon, and no one pays attention. The largest exchange in the world, which for many people embodies the entire cryptocurrency Mt. Gox, completely stops trading and withdrawals. The official explanation: problems with transaction variability. We need time to fix it. If you had bitcoins on Mt. Gox on February 7 of 2014, they turned into bricks. You can't exchange them, you cannot withdraw them to wallet or other exchange. You can't do anything. In 10 days, the price drops to $614. Now Mark Karpoles, CEO of Mt. Gox, is resigning from the board of directors of the Bitcoin Foundation. It is a bad sign, right? The Mt. Gox website becomes unavailable. An internal document called Crisis Strategy Draft is leaking onto the internet. It describes the situation in the dry language of management. 744,408 bitcoins were lost. The document has the effect of exploding bomb. The finale. Mt. Gox files for bankruptcy in Tokyo, claiming hackers stole everything. All the money and bitcoins that you had on the exchange on February 7 were buried. But it was a story on behalf of the exchange's clients, and now let's go back a little bit and I'll tell the story from the inside of Mt. Gox. Honestly, this probably shocked me the most. If you, like customers in 2014, thought that hackers stole 750,000 bitcoins at once in February, then you are so wrong. Firstly, as it turned out later, Mt. Gox lost not only 750 customers' bitcoins, but also 100,000 of their own. But hackers stole only 650,000 of them. What about the other 200? Oh hell, I don't even know how to say it, but Mt. Gox kind of fucked up themselves. They didn't send them to scammers or something like that, they just lost their wallets. And these 200,000 were found and restored, but fuck, are you already beginning to understand the level of negligence? Anyways, okay, what about the other 650,000 bitcoins? As it turned out, hackers discovered a vulnerability in the Bitcoin protocol related to transaction flexibility. To simplify it, they could intercept withdrawal transactions from the exchange and slightly change its ID, making the exchange think that the transaction had failed and send the money again. So how it worked? The client asks to withdraw 10 bitcoins and mt.gox sends 10 bitcoins and the hacker changes the ID and the exchange sees error, the transaction failed. And now the exchange sends 10 bitcoins more. And the hacker basically gets 20 bitcoins, 10 from the first failed or modified transaction, and 10 for the repeated one. The result: the balance of the exchange was melting in reality, but everything was smooth in their internal database. To identify this problem, it was necessary to look at what balance is listed in the internal accounting and how much money is actually in the wallets of the exchange. But, they didn't do it, obviously. And here's the key question: how the hell can you not notice it? Well, okay, I can understand how you can just miss such a quiet thief of like 1 to 2 bitcoins when checking such discrepancy. You can just even write it off as an error. Although everything works clearly on blockchain, so the money came, money went. And the balance should always be matched. But it's not about 1 or 2 bitcoins, it's about 650 freaking thousand bitcoins. In fact, this means only one thing: no one has ever checked the real balance of the money. They only looked at the literal reminder of the program. How is that even possible? I don't know. It would even be easier for me to believe that Mark Karpeles stole himself all this money. But no, it's a proven fact that he did not steal it. He just didn't notice. At the time of closing, the exchange had 2,000 bitcoins in its hands. And the system reported that the total customer balance was 750,000. And by the way, the mt.gox bankruptcy case is still ongoing for 2026. Payments to the victims began only in 2023 and continue till this day. Of course, they do not return the full amount because there was almost no money or bitcoins at the time of bankruptcy, and they pay a proportional amount of the money that could be found in all the same lost and forgot wallets. Okay, now back to the story. The world is seeing the unreliability of Bitcoin again, even though the specific people behind the specific server were unreliable. The long-haul winter begins. Other exchanges, Kraken and Bitstamp, are beginning to actively develop taking over the mt.gox customers, but Bitcoin is being buried again by the masses. The media predicts a fall below the dollar. The price reaches $310 and continues to fall, of course. You look at your portfolio and those $100 turned into 28, which is painful, but with the previous purchases, everything is still good. The whole of 2015 can be called a recovery period. At the beginning of the year, the price made another major drop amid the increasing complexity of the network and the outflow of miners who just decided to sell off their accumulated assets completely. The absolute bottom was on January 15th when the price reached $176. And then there is a pause. The people calmed down and the negative news background just changed first to silent and later to a slightly positive one. BitLicense, the world's first comprehensive set of rules for cryptocurrency companies, is beginning to develop in New York, and that is the government recognizes the existence of the industry. The first regulated exchange Coinbase appears against the background of the devaluation, and the trading volumes in Chinese stock exchange is starting to grow. The Economist magazine published an article called The Trust Machine, in which the blockchain is understood separately from Bitcoin. The popularity of the technology is starting to grow and to be applied in various fields. And perhaps the main event of the year, Vitalik Buterin launches the main Ethereum network. The era of smart contracts and altcoins is beginning. So far, this does not directly affect the price of Bitcoin, but it lays the foundation for the future. By the end of 2015, the price is fixed at around $425. Compared to the peak of 2013, it's a penny, but people are starting to believe that growth is possible, and by the way, most of the crypto millionaires you know today bought in 2014/2015, at the bottom, when everyone was burying Bitcoin. 。 If 2015 was the year of survival, then 2016 consolidated Bitcoin's position and laid a very powerful foundation for 2017. First of all, 2016 is the year of second halving, which, as you know, naturally rises prices. Smart money knew this and began to enter with the expectation of growth. In May, the price starts to rise and reaches $768, overcoming a psychological milestone. And then, of course, it will be adjusted before the halving itself, but it doesn't matter. Everyone is waiting for growth and buying. The second halving happens, and the block reward drops from 25 to 12.5 bitcoins. Just like last time, no instant miracle happens, just smooth, steady growth. And on the day of the halving, price was $666. Bitfinex announces a hack. Hackers steal 119,756 bitcoins, and that's about $72 million at the time. The market reaction is completely different than in the case of Mt. Gox. First of all, this is due to Bitfinex itself, which distributes losses among all the users, writing off 36% from each account and giving out tokens in return, which they promise to redeem later. And secondly, the skin of the cryptons has become more thicker, and everyone already understands that the problem of the exchange is the problem of the exchange and not the Bitcoin as a technology in general. As a result, the exchange survives and Bitcoin is a little shaky, but the growth does not stop. The price reaches $975 again, almost catching up with the historical growth of 2013. But there is an important difference here. In 2013, it was a hype fueled by Silk Road and Chinese capital outflow, basically fast rise and fast fall. Now it is natural, organic growth that has laid an extremely reliable foundation. The market is ready now. At the beginning of the year, the price is still hovering near the historical maximum, and throughout the first quarter, we moved into the range of $950 to $1,300, while the news background is relatively negative. China is tightening control over exchanges, and Chinese exchanges are introducing fees to combat speculators. SEC, or United States Securities and Exchange Commission, rejects Bitcoin ETF application launch. As demand continues to grow and more people learn about Bitcoin, the price, although it reacts with short drops to these events, bounces back almost immediately. And this makes it clear to people that Bitcoin is reliable and people continue to buy it. But there is still not enough of impulse for explosive growth.
Bitcoin trade here in Japan accounts for nearly half the global trade volume. Compare that to 25% in the US. The number has surged since the government passed a new law earlier this year recognizing the digital currency as a legal form of payment.
Japan officially recognizes Bitcoin as a legal tender, and thousands of Japanese retailers are starting to massively implement Bitcoin payments throughout the payment process. And people to whom the government had just told it's legal are starting to buy. And the whole world is watching and joining in. The price increases from $1,000 to $1,350 per month, and by May 5th, it surpasses a $1,500 mark for the first time, updating the historical maximum. Against the background of general positive vibe around Bitcoin, something is happening that will change the cryptocurrency forever. The ICO boom begins. For those who don't know, ICO is initial coin offering, is the initial sale of project tokens before going public. In fact, it's an analog of IPO, but for cryptocurrencies.
Blockchain with a built-in programming language as kind of what I thought was the simplest and kind of most logical way to actually build a platform that can be used for many more kinds of applications.
Do you want to learn to code your own cryptocurrency and build your own ICO?
There is a very important point here. In fact, the ICO boom is primarily due to Ethereum because it was Vitalik Buterin who gave developers a platform where they could easily create their own tokens without writing a single line of complex code. And we will analyze this phenomenon in more detail in the video with the history of Ethereum, if of course you like this video. And by the way, your likes is the best help to the channel and of course a signal to me that you like such complex videos. But let's get back to the topic anyways. The ICO boom will greatly overlap Bitcoin and Ethereum. The cause and effect is something like this here. Interest in Bitcoin is growing, Ethereum is growing along with Bitcoin as the main alternative interesting to people. And due to the growth of Ethereum, which surpassed Bitcoin in percentage term, it becomes clear to people that millions can be made not only on Bitcoin, but also on all cryptocurrencies in general. And since people have a Bitcoin chart in front of their eyes that has grown from cents to $1,500, the opinion is fixed. The sooner you enter, the more you earn. As a result, there is a huge demand for new cryptocurrency projects that are under the development and have not yet entered the stock exchange. And because of this demand, and thanks to ICO, developers raised millions of dollars even before the project was released. Banker, an Israeli project creating a protocol for token liquidity, raised $153 million in 3 hours. Gnosis raised $12 million in 15 minutes. Status, SNT, and Ethereum Messenger with wallet integration raised $100 million in few hours. And Tether raised $232 million. Since the cryptocurrency is on super rise at this moment, at the start of ICO boom when entering the stock exchange, many coins really became more expensive and brought income to early investors, and this circle has closed. Initially, the boom began with Asian countries, mainly China and Korea, but it quickly became a global phenomenon, which, by the way, was greatly facilitated by the appearance of Binance. But there is a key point. Why did the demand for these ICO projects raise the demand for and the price of Ethereum and Bitcoin? And here everything is really simple. In order to buy tokens at the ICO stage, dollars are not suitable, and the purchase takes place with Bitcoins and Ethereum. As a result, even if you initially just wanted to participate in the ICO, you in any case at some point bought Bitcoin and Ethereum, and thereby raising the demand for the main coins. In the period from May to August, the price of Bitcoin increased from $1,500 to $4,700. In August, another key event occurred that did not significantly affect the price, but was very important for the community. The Bitcoin hard fork and Bitcoin Cash BCH appears, and a new cryptocurrency with an increased block size. And this topic caused a lot of controversies because on one hand, it solves the key problem of Bitcoin, and on the other hand, the community did not want to change the code.
Chinese regulators are raising red flags. The country's federal bank has declared all initial coin offerings, or ICOs, offered by Chinese companies as illegal.
The People's Bank of China is in shock again with capital outflows. It outlaws ICOs and begins shutting down the cryptocurrency exchanges. Here I think it's worth clarifying that at that time China was swallowed up by total ludomania. They were just buying everything they could and even wrote bots that allowed them to buy even faster. And against this background, by the way, the crypto scam of that era just flourished. Looking ahead at the time of 2018, more than 50% of ICOs completely disappeared, bringing 100% loss, and another 30% brought a loss of around 90%. So with the ban in China, the price drops from $4,500 to $3,100 in just a few days. But after a month, the price reached $5,000, and the Chinese simply turned on VPN and switched to Binance, and there was no stopping it. The price breaks through $5,000, then $6,000. And news background, the Chicago Mercantile Exchange announces the launch of Bitcoin futures. And this is an institutional green flag. Everyone wants to buy before the institutionals arrive. The price breaks through $8,000, and on November of 28, Bitcoin reaches $10,000, and this event is in mainstream media all around the world. The hype level as well as the price is at the historical high. Almost the whole world will know about Bitcoin really soon.
Did anyone read that article about Bitcoin I sent you?
Yeah, I can't believe a single Bitcoin is worth about $5,000 now.
The price breaks through $12,000, then $15,000, then $18,000, and on December 17th of 2017, historical high of $19,475.
By this time, everyone, from your friendly neighborhood Uber driver to the world's biggest bankers, had an opinion on Bitcoin.
In financial markets, doubling your money in 1 year is unusual. 27 times is completely off the charts.
So what is happening in the world? Exchanges are overloaded and the Coinbase is lame from the influx of users. The term Bitcoin is becoming the most Googled word of the year, and grandmothers take out loans to buy Bitcoin, and Prime TV presenters discuss cryptocurrencies now. Let's just say that almost the whole world knows about Bitcoin now.
That's a statement. What do you fear?
So you remember about your little portfolio and go to check it. First, let's look at the S&P 500. You invested $400 in total and now you have $722. You have almost double the investment, and that's cool. And what about Bitcoin? Well, let's do it in reverse order this time. The coins that you bought during the second peak of 2013 are now worth $1,726. The coins from the first peak are worth $8,579, and the coins from the 2011 are worth $64,808. And your very first purchase is estimated at $6,491,666. In other words, the Bitcoin slightly surpassed S&P. But as always, you just throw another 100. The correction begins. The price has dropped significantly, and by the new year it drops to $12,897. And this was the first serious correction after the insane growth. And thus in 2017, Bitcoin grew 13 times. But of course, those who entered at the highs are not happy. Well, what can you do? 2018 is probably the year that everyone would like to just forget. The December correction sobered up the market, and all the newcomers who entered at the peak saw losses and began to exit in a panic. And most importantly, the ICO problem became obvious. It has reached the masses that most projects are either full-time or almost full-time, and less than 20% of all ICUs actually made at least some profit half a year after the boom. South Korea, against the background of huge number of bankrupt citizens, begins the first regulations and announces a possible ban on anonymous accounts on exchanges. Facebook prohibits advertising cryptocurrencies, and Google and Twitter will join it later. It's important to understand that these were the main sources of traffic for all the ICO projects and primarily for scams. As a result, without this advertising, demand drops instantly. Against the background of the correction and the understanding that the price was inflated due to the ICO, the whales who bought from $1,000 to $5,000 begin to take profits and sell their bitcoins. And by the end of January, the price had dropped to $10,000. By July, the price had dropped to $7,500, and the US Security and Exchange Commission is taking active action against ICO scams. And the SEC finds the projects and announces that most tokens are securities, which means that they must be registered.
All tokens or digital assets that were used to raise funds for a venture or a company with an expectation of profit, either given by the company formed or exchangeable on a secondary market, are classified as securities.
Regulatory pressure has in fact completely killed the main driver of 2017. Without the new ICOs, there was no influx of new money. The market was left without fuel. Until November 15th, the price fluctuates around $6,500, and the $6,000 mark is considered the absolute bottom below which the price will not go. The Bitcoin Cash community splits into two camps: Bitcoin ABC leader Roger Ver and Bitcoin CV Craig Wright. The hash war begins, and the miners are fighting for the survival of their version. The entire cryptocurrency market is going into a steep peak. Miners were selling bitcoins to finance the war for Bitcoin Cash, and this created a tremendous pressure on the price. By the end of December, the price is $3,866. So the $100 you invested in 2017 turned into $19. It is painful, but as always, you still have your past investments, so everything is fine. From January to March, the market was still in a coma, and the price was in a range of $3,500 to $3,800 for a long time, and only crossed $4,000 by the end of March against the background of the fact that Fidelity Investments, a giant with trillions of dollars under management, announced that it is launching a custody service for Bitcoin, and this is a signal big money is getting ready to enter. So now the mood changes from Bitcoin is going to zero to wow, maybe we still do have a chance. Bitcoin suddenly soars from $4,150 to $4,900 in just few hours. Someone from Wales started a very large purchase.
Bitcoin has had a monstrous move, about a $1,000 move from 4,100 to 5,100 essentially.
The reaction is immediate. The market comes alive, and altcoins are also catching up, and for the first time in a year and a half, people see green numbers in the profit-loss graph. The price breaks through psychological mark of 5,000, and crypto Twitter is going crazy. After a year of depression, euphoria begins, and everyone is talking about a boom market, and by the end of May, the price reached $8,320.
Facebook officially unveiling its cryptocurrency plans.
Facebook announces the launch of its own Libra cryptocurrency. For the first time, the largest corporation with billions of users officially announces its own entry into the crypto world, and this instantly legitimizes the entire industry, and the price soars to $13,000 by the end of June. By December, the price drops to $7,300, but the mood is positive now. Everyone is waiting for the next year because the next year is the year of halving. The first 2 months of 2020 were relatively calm. The market is waiting for halving, and the news background is positive. The price floats between $7,000 and $10,000, even breaking through $10,000 mark a couple of times. And in general, everyone is waiting for good news and is gradually just increasing their capital.
It has been confirmed that there are 2 cases now in England.
Egypt's health ministry has announced a first confirmed case of the COVID-19 in Africa.
The latest Italian health report here says there have been more than 50 new cases overnight.
COVID-19 can be characterized as a pandemic.
A pandemic has been declared. Countries are closing borders, declaring lockdowns, and global stock markets are collapsing faster than in 1929. Institutional investors sold everything they could sell to cover margin calls in the stock market. Bitcoin was the most liquid asset in their portfolios, so it was drained in the first place. In 12 hours, the price of Bitcoin dropped from 7.6 thousand per coin to 3.8 thousand. And this event would later be called the Black Thursday. But interestingly, on May 1st, the price was already $8,670, meaning the Bitcoin grew almost as fast as it fell. The reason is that absolutely the entire crypto community believed in growth, and the reason for the price drop was clear for them. The outflow of money was the result of forced whale sales. It was a rare case in the history of Bitcoin when almost everyone realized that the fall of Bitcoin was an opportunity to buy at a discount. Ordinary retail traders invested all their money in the Bitcoin, and the big players who were able to survive the Black Thursday did the same thing. The volume grew every single day, especially considering the approaching halving. The time of the third halving. The block reward dropped from 12.5 bitcoins to 6.25 bitcoins. As in previous times, there was no immediate growth, but from May 1st to October, the price rose smoothly from $8,762 to $10,840. It was also supported by the boom of DeFi on Ethereum. And just like in the past, when Bitcoin made huge leaps, there was always a positive news background at first, but the last straw was needed here, and this time that straw turned out to be PayPal.
PayPal cashing in on a crypto craze, a payment company announcing a new feature that will allow users to buy, sell, and hold cryptocurrencies, including Bitcoin.
They announced that the customers will be able to buy, sell, and store cryptocurrencies now, and this is a colossal legitimization. A giant with 300+ million users is entering the crypt, and the price reacted instantly and reached $13,500 before the end of the month. And in general, everything that is needed for the uncontrolled growth of Bitcoin has come together again. Bitcoin is starting a frenzy rally, showing price gains almost every single day. On November 30, Bitcoin reaches $19,633, basically repeating the 2017 high. A historical moment here. The Bitcoin breaks through $20,000 for the first time and goes even higher. The previous record has fallen, and everyone who said Bitcoin was a bubble in 2017 has fallen silent. A new era has begun. Institutional investors are joining in masses. Michael Saylor's MicroStrategy continues to buy Bitcoins, and by the end of the year, they already have over 70,000 Bitcoins. And Grayscale buys more Bitcoins than miners produce, and Mass Neutral buys $100 million worth of Bitcoins. The price reaches $28,841, and there are no signs of slowing down. The trend set in 2020 continues, and the price is rising with minimal corrections. And as of February 8th, the price was $38,886. Complete euphoria. They are buying up everything. And when it seems like it wouldn't get any better, this happens. The price reaches $46,148, a jump of $7,000 per day. And this is the largest daily gain in history. But basically, the question is, what happened here? This is the answer. This is what happened.
We have invested in aggregate $1.5 billion in Bitcoin.
Elon Musk announces that Tesla have bought a $1.5 billion worth of Bitcoin and basically plans to accept it as payments. The most popular company and the richest men in the world officially support Bitcoin. Millions of retail investors are rushing into the market, and on February 22nd, the price is at a record $57,500. The price continues to consolidate in the region of $50,000 to $60,000, and Musk continues to play with cryptocurrency and switches his attention to Dogecoin, pumping it to some kind of inadequate size. And by the way, if this is not market manipulation, I honestly don't understand what manipulation is. But let's leave it out here. A new historical maximum of $63,523 was set on April 14th. Everyone is euphoric, and the market is overheated. And of course, here as usual, you remember about your little portfolio at the peak. Well, this time you will be pleasantly surprised. The $500 you invested in S&P turned into $1,286. It's not too bad, right? Bitcoin is a little more interesting here. The $500 that you invested is now valued at $21,419,665. And while the very last $100 that you were upset about in 2018 is already worth $326. Do you also remember what happened to Bitcoin 3 months ago when Musk announced the purchase? And well, this happened in May, and it's him again. This time Musk announced that Tesla is ceasing to accept Bitcoin due to environmental problems, gold mining. And in one day, the price drops from $56,714 to $49,735. And by the way, this is not called and considered to be manipulation. Again, for some reason, I don't know.
China is intensifying its crackdown on cryptocurrency. The government ordering the country's biggest banks to, quote, strictly implement rules that restrict them from providing crypto-related services.
China is tightening its rhetorics against mining and trading cryptocurrencies. So China, which produced 65% of the world's mining capacity, threw the industry out of the country. And this caused panic and massive sales as a result of these events. On May 21st, the price reached $29,796, essentially falling to the level of the beginning of the year, and your last $100 turned into 46 now. And that hurts, I know. So now miners are migrating to the United States, Kazakhstan, and Russia. The price is gradually recovering back to $40,000.
China declared all transactions of the sort illegal.
Bitcoin now a legal currency in El Salvador. The country's president announced the move earlier this month.
China declares all crypto transactions illegal, but at the same time, El Salvador officially becomes the first country to accept Bitcoins as a legal means of payment. And at the end of September, the price is $48,137. Launch of the first Bitcoin ETF in the United States, ProShares Bitcoin Strategy ETF. This is not a spot ETF just yet, but a futures one, and it's a still huge step towards legitimization. Against the background of the general positive energy, the price updates the historical maximum, $67,549, and euphoria comes again. Everyone is waiting for $100,000 before the end of the year. But instead of rising to $100,000, a correction begins. The new stamp of well-known illness creates uncertainty. The US Federal Reserve is preparing to raise rates and profit-taking by major players. The year closed on a positive, though a restrained note. Bitcoin was still worth 60% more than at the beginning of the year, but the price has dropped to $47,169 after a recent peak, which is unpleasant. The price continues to fall from December levels and breaking through $40,000, making investors wary. Now geopolitical crisis, the beginning of the events in Ukraine, and it creates uncertainty in all markets, and Bitcoin initially falls, but then shows its safe haven function, a short-term increase to $44,000. Perhaps it was on this day that a chain of events comparable to the collapse of Mt. Gox, which we discussed earlier, was launched. To figure it out what happened that day, we need to go a little bit back and find out the history of the Luna and UST project. In 2019, Doc Wan, a charismatic and ambitious Korean entrepreneur, created an ecosystem consisting of two main components. Luna was a volatile token like Bitcoin or Ethereum, and its price varied depending on the supply and demand. And UST, Terra USD, was an algorithmic stablecoin. It should have always cost exactly $1. The main feature of Terra was the ability to convert Luna to UST and back at any time at a fixed price. If UST falls below $1, for example 99 cents, arbitrators can buy a cheap UST on the market, convert and receive a Luna worth $1. profit 1 cent from each token. And this reduces the USD supply and basically raises the price back to $1. If USD rises above $1, for example, $1.01, arbitrators can buy Luna, which can be converted to UST at $1, and sell them on the market at $1.01. And this creates new UST, increases the supply, and reduces the price back to $1. The main secret of the success is that Terra has created its own ecosystem of applications. The most popular was the payment application Anchor Protocol. It offers 20% per annum on UST deposits, and it was a fantastic return in a world where banks were giving only 0.1%.
Here's how to earn 20 to 40% APY on your stablecoins.
It's an amazing opportunity to make a yield on your crypto assets.
All we have to do is to deposit our UST to earn this huge return.
You can start making money passively right now.
Thousands of people from all over the world bought UST and put it in Anchor to receive 20%. And the demand for UST was huge, and this required constantly printing new USTs, and for this it was necessary to burn Luna. As a result, the price for Luna increased and everyone was happy. And by the beginning of 2022, UST was the third largest stablecoin in the world after USDT and USDC, and Luna was in the top 10 cryptocurrencies with the price about $80 to $90. The system worked, but it had a fatal flaw that many skeptics understood. UST was not backed by real dollar like USDT or USDC. Its value rested solely on trust in the mechanism and on the demand created by the anchor. If people abruptly wanted to exit UST, lost trust for example, the arbitrage mechanism would stop working because the price of Luna would also start to fall. And now let's get back to our story. A major player, presumably some foundation or a group of whales, sold UST in the amount of $285 million, and this pushed UST price from $1 to 98 cents, and usually the arbitrage mechanism quickly restored the price, but this time the sales continued. Someone was systematically selling huge amounts of UST, and Dun Quan and the Terraform Labs Foundation, the Luna Foundation Guard basically, began spending Bitcoin reserves, which they has accumulated by $3+ billion to buy back UST and hold the peg. USD price fluctuates, 90 cents, 80 cents, and then 70 cents. In a panic, people began to withdraw USD from Anchor, which, let me remind you, held billions. And the more USD was sold, the more Luna was created to support USD. USD price fell to 50 cents, then 20, then 10 cents, and hyperinflation began. Luna was printed in trillions, so Luna was worth $10 today and $0.000001 a week later. Bitcoin Reserve, Luna Foundation Guard spent over $3 billion in Bitcoins trying to save the peg. They bought UST, but it was useless. The result? Total loss of capitalization, about $50 billion. Millions of people who kept their savings in UST, believing in a safe 20% income, lost completely everything. Luna became a symbol of total collapse. It could be bought for pennies, but it was already worthless. From May 7 to May 13th, the price of Bitcoin dropped from $36,000 to $29,000. But that was just the beginning. The collapse of Terra was not an isolated event. It started a chain of bankruptcies. Three Arrows Capital, or 3AC, a huge crypto hedge fund that had huge positions in Luna and UST, after the collapse they became insolvent. So Celsius Network, a crypto bank that provided loans to 3AC and other funds, after the collapse of 3AC, Celsius started having problems and they froze their withdrawals of funds, and hundreds of other smaller projects also went bankrupt. After these events, the price dropped to $20,000 by early July and remained at this level until the November. Your last investment, $100 that you put there, is valued up to $30 now. When everyone thought that restoration period has arrived, another titan fell. If the collapse of Terra was a disaster due to poor math and panic, then the story of FTX crash that began in November is the story of the largest fraud and financial crime in the history of cryptocurrencies. The story of how a young genius who was adored by regulators, investors, and the media turned out to be an ordinary fraudster who stole billions of dollars from his clients. Sam Bankman-Fried, known as SBF, was the creator of the second largest exchange in the world after Binance, and the name is FTX Exchange, and he also owned the Alameda Research crypto trading fund. So Sam here has created for himself the image of a brilliant but absent-minded nerd who just wants to save the world, effective altruism. He wore shirts and t-shirts, didn't sleep well, and played video games during important meetings. And he became a favorite of American regulators and politicians, donating millions of dollars to the Democrats. He was considered the white knight of the crypto industry, and he even saved other projects during the collapse of Terra this spring. FTX clients, ordinary people and traders, they deposited their money on the exchange expecting to be traded and kept safe, and Alameda Research is a crypto trading fund that needs huge amounts of capital for its trading activities. The whole idea of the fraud is that SBF and his team gave Alameda secret access to FTX customer funds, and they simply took the client's money and transferred it to Alameda for trading, investments, venture deals, and personal expenses. FTX accounting showed that clients' money was in the place and the money was also displaced in the client's accounts, but in reality, the assets were no longer there. Alameda actively traded its own FTX coin, the FTT token. They had huge reserves of this coin, and they used this token as a collateral to obtain loans. In fact, they printed their own money and borrowed real money against it. So now let's look at what happened in November. The crypto publication CoinDesk publishes an article based on leaked internal balance sheet of Alameda Research, and they found that Alameda's balance consisted for the most part not of real money or stable coins, but of the FTT token. And that means that Alameda was a house of cards. If the FTT price falls, their capital will evaporate. Binance CEO Changpeng Zhao announces that Binance will sell all of its FTT reserves, and it's about $500 billion due to the latest news. And in fact, it was a chance to sow panic and lead away the customers of its main competitor. And the FTT price is starting to fall, and customers are really starting to panic. Everyone understands that if Alameda collapses, then FTX can collapse after it. A massive withdrawal of funds of FTX begins, and in a few days, customers are trying to withdraw billions of dollars, and FTX, as you already understood, cannot process the withdrawals because there is no customer money in reality, and they are in Alameda, stuck in unprofitable positions, and SBF is desperately looking for salvation. SBF is negotiating with CZ that Binance will buy FTX and thus save it, an important context that scale of embezzlement is not yet known, but CZ announces that Binance has signed a letter of intent. Now Binance is studying the hole in the FTX balance sheet and understands the scale of the disaster. At least 8 to 10 billion of client funds were lost, and Binance is pulling out the deal. And the FTT price drops to zero finally. FTX stops the outputs completely. FTX, Alameda Research, and more than 100 related companies are filing for bankruptcy in the United States. Sam Bankman-Fried is resigning as CEO, and from publication of CoinDesk to the bankruptcy, the price of Bitcoin has dropped from $20,000 to $15,800. The price of Bitcoin fluctuates around $16,000 to $17,000, and the mood? Completely hopeless. Bitcoin is dead for the 100th time, and the media is burying the industry by predicting that the price will drop to $1,000. January caught a lot of traders off guard, In the wake of FTX crash, a huge number of shorts accumulated on the exchange, and everyone expected Bitcoin to drop to $10,000, but at the beginning of the year, the United States reported extremely low inflation, which is kind of a sign that the worst is finally over. As a result, all high-risk assets began to grow organically, and now we recall the huge number of worthwhile shorts. Having overcome 17,500 mark, these shorts began to be illuminated in masses, and a short quiz occurred. As a result, at the end of January, the price jumped to $23,130.
Collapse of two major banks, all the talk over the weekend, likely had lots of Americans, maybe you worried about the potential impact to your own finances.
In March, the unexpected happens. The banking crisis in the United States. March 10, the collapse of Silicon Valley Bank, SVB. March 12, collapse of Signature Bank. Investors see Bitcoin as a protection against the banking system that is bursting at the seams. And against this background, instead of falling, Bitcoin soars from $20,000 to $28,000 and remains near this level until October. The crypto publication Cointelegraph publishes sensational news. The SEC has approved the BlackRock ETF. The price instantly soars from $27,000 to $30,000 and then drops back a bit because it turns out that the news was fake. The funny thing is that despite the fake news, the market realizes that it's only a matter of time before an ETF is approved, and the market saw that as soon as it happens, and instant price increase awaits us. Paradoxically, investors began to buy in advance, even realizing that the news is fake. Throughout November and December, expectations were high. The largest management companies in the world like BlackRock, Fidelity, ARK Invest applied for ETFs. And the market believes that the SEC will finally approve them in January 2024. Against this background, the price of Bitcoin is constantly growing and reaches $42,000 at the end of the year.
Regulators have given money managers the approval to launch 11 spot Bitcoin exchange-traded funds. Now, everyday investors can get exposure to the world's largest cryptocurrency without having to own it.
And now, a historical moment. The SEC finally officially approves spot Bitcoin ETFs. 11 ETFs have been added at once, including applications from the largest management companies like BlackRock, Fidelity, ARK Invest, Bitwise, Vanek, Franklin Templeton, and others. And bidding began on January 11, 2024. The market reaction here is unexpected. The price before the event is about $47,000 to $48,000, and immediately after the approval, the price dropped to $40,000. And this is a classic case of buy on rumors, sell on the news. Many investors who bought EFTs in anticipation in October to December 23 recorded profits actually. But the small correction doesn't matter here. The ETF has open access to institutional investors who previously could not buy Bitcoin directly due to regulatory restrictions. And now pension funds, insurance companies, and large investors could now just gain access through their usual brokerage accounts.
The Bitcoin ETFs really doing a great job of holding very tight bid-ask spreads, tracking the fund's net asset values, over 1 million investors and over 20 billion in assets. So
as expected, ETFs have attracted billions of dollars of institutional capital, and BlackRock and Fidelity bought huge amounts of Bitcoins daily, often even exceeding the mining volume of new coins by miners. From February to mid-March, the price increased almost every single day. During this period, in fact, there was not a single bad moment to buy, and the price went strictly up. On March 14th, the price reached $73,000 by updating the old all-time high, and it is fixed in the range of $65,000 to $70,000. V4 halving. The block reward dropped from 6.25 bitcoins to 3.125 bitcoins. As in previous times, there were no immediate growth, but everyone expects growth throughout the year. The price will stabilize in the range of $60,000 to $70,000, and spoiler alert, it will remain in this range until November. But before that, there are a number of important events. In June, the SEC approves the spot Ethereum ETFs, and this creates a positive background for the entire market.
The Federal Reserve cut interest rates by a larger than usual ½ percentage point on Wednesday. Fed Chair Jerome Powell said it was aimed at boosting a cooling job market while continuing to push down on inflation.
In September, the US Federal Reserve finally starts lowering interest rates, and this is a powerful positive signal for risky assets. In October, the price is approaching $70,000 to $73,000, testing the March highs.
There's a new group of voters this election cycle that could make a big difference. Can you guess who it is? Especially in battleground states, we are talking about crypto investors.
And then the fun begins. In a run-up to the US elections, the crypto community is becoming an important political force. Both candidates, Trump and Harris, make statements about their support for innovation.
Remain dominant in AI and quantum computing, blockchain and other emerging technologies.
The United States will be the crypto capital of the planet and the Bitcoin superpower of the world, and we'll get it done.
Although Trump is much more actively positioning himself as a crypto candidate, the market is starting to polarise in a possible victory for Trump, who promises to make the United States the crypto capital of the world and dismiss SEC Chairman Gary Gensler.
On day one, I will fire Gary Gensler and appoint a new SEC chairman.
Donald Trump wins the US presidential election and he fulfills his election promise. He appointed a cryptocurrency supporter as the head of SEC, and Gensler announced his resignation. And then he announces the plans to create national Bitcoin reserve in the United States. Price reaction jumped from $67,800 to $99,000 in just 2.5 weeks. Bitcoin has crossed $100,000 mark for the first time. At the end of the year, the price was slightly adjusted to $92,600, but the all-time high was also updated, $106,147. Bitcoin was fixed in a range of 90 to 100, but by the end of February, it is still adjusted to $84,000 amid increased trade tensions and uncertainty around US tariffs. Investor optimism was weakened, leading to an outflow of funds from spot ETFs and general caution in the market.
Yesterday, I signed an executive order officially creating our strategic Bitcoin reserve, and this will be a virtual Fort Knox for digital gold to be housed within the United States Treasury. That's a big thing.
President Donald Trump announced the inclusion of Bitcoin in the US strategic reserve along with Ethereum, XRP, Solana, and Cardano. Bitcoin surged more than 11% on the day, approaching around $94,000 and immediately after the news, as it increased institutional interest and optimism about regulation by the US government. But as usual, the market worked on the principle of buy on rumors, sell on the news, and many investors began to take profits and sell bitcoins, bringing the price to $76,000 in April. As in the case of ETFs, the effect of truly global news did not come immediately. When the correction ended and all the small players were locked out, the institutionals began to buy and they bought greedily. The price went up again. Price in April, $94,000, May, $111,000, July, $118,000, and October, current all-time high, $124,750. And of course, you are looking into your portfolio as usual. Your $600 invested in S&P is now worth $2,267. And that's objectively cool, you know. While the Bitcoin is estimated at $42,065,327. That's not bad at all. Of course, as always, just such a takeoff, a correction was waiting for us. And as a result, on December 31st, 2025, the price was $88,500. I think you already know this modern part of the story, and the correction continued on March 14th, and the price is $71,136, and Bitcoin is being buried again. And you look at the last purchase of Bitcoin, and now $100 turned into 57, and I think you don't really care at this point because you have seen much worse. Even taking into account the drawdown, your $700 invested at the absolute worst moments of history is now worth $23,986,903. It's scary to think how much it would be if you bought not at the peaks but at the falls. And now the main event, it will happen in a second. After watching this whole video until the very end, you'll like this video and subscribe to the channel with the most honest and sometimes serious crypto news. Well, at least I hope so. And I will see you in the next video. Bye.